Well, you know how I like to report good news. So this morning we've had a flurry of positive adjustments in people's price targets. And the result is that Tesla stock is up quite nicely this morning, up about $7, $8, a long way to go to get back to the numbers that we saw just a few days ago. Been a wild 30 days. But remember, you have to go all the way back to December 5th to see numbers this low. Anyway, the markets are up also in the early going. Lots to talk about this morning. Let's just jump right into it. This is from James Catt, also known as Tesla Fan Metal, MTL. He says here's a summary of recent rumors on the Model Y refresh, the Juniper timeline. The China launch will be after Chinese New Year, the beginning of February. Gosh, that seems like a long time considering they're supposed to be making 2,400 a day. What are they doing with all those cars? Anyway, Berlin at the same timeline based on a post below. Austin, Fremont, probably same-ish timeline given that they recently had downtime for upgrades. So maybe we're looking at all of them coming out at the same time around the beginning of February. This was the post he was talking about. This is Gigafactory Berlin News, Model Y Juniper. They actually call it Juniper. Soon also from Giga Berlin. According to insider sources, preparations are well advanced. The training of workers at Giga Berlin could start this month. All this suggests the presentation of the Model Y facelift is imminent. Okay, so that's if it's February 1, it's February 1, better than March 1. Sawyer Merritt says this, 𝐂𝐚𝐿 has raised its Tesla price target to 404 from 298. They maintain a buy rating. This is the quote, despite weaker than expected deliveries, we are sticking with our buy and raising our target. The target is based on 40x compared to 34x, I guess their PE, of their 2027 estimate, non-GAAP EPS of $10.11. Our 2027 non-GAAP of $10.11. I think it would be way higher than $10.11 in 2027. We feel this multiple is justified based on the multiples and growth rate of Tesla's comp set, which we deem to be a group of mega cap tech stocks, including Alphabet, Amazon, Apple, Meta, Microsoft, and NVIDIA. The set of companies trades at a median of 23x, but has a combined revenue growth rate half of Tesla's. Longer term, Tesla also has a generational set of growth opportunities ahead, including EVs, autonomy, AI, energy storage, and robotics. We acknowledge the limited upside implied by our price target, but believe it is inappropriate given the near-term volatility. From Investopedia, we have Wedbush Analysts wrote following Thursday's deliveries data that while it missed estimates, the delivery in the quarter was a respectable number. They said they would be strong buyers of any decline in Tesla shares as they believe shares will rise this year as a second Trump term benefits Tesla, as we've talked about autonomous robotaxis. Bank of America Securities senior automotive analyst John Murphy on Yahoo Finance had a take on the FSD I hadn't heard before. He is a big believer in cybercabs, believes they can replace the 1 billion miles that the taxis alone currently drive in New York City alone. But his bigger expectation is this. He thinks that autonomy will increase the speed of travel and that this will be an economic boon. And he points to China, believing that part of the reason they've had such a boom is because of the increased speed of travel there. Interesting take. Like I said, hadn't heard that one before. Then from Barron's, despite the Thursday dip, Tesla stock remains up 51% since the November 5 election, adding some $410 billion to its market value. Investors are focused more on 2025 right now. Tesla is expected to launch a lower price model, helping boost volume growth. Then there is artificial intelligence. Tesla uses AI to train its autonomous driving software and plans to drive a self-driving robotaxi service later this year. Quote, the 1 trillion of AI valuation has started to get unlocked in the Tesla story. We believe the march to 2 trillion valuation. Of course, we've heard that from Dan Ives before. He rates Tesla shares a buy, 515 price target. The difference between his price target and others amounts to about 1.1 trillion in market value. Wall Street doesn't exactly agree on how to value Tesla. Coming into Friday, shares have fallen for 5 consecutive days. Of course, today they're up. Canaccord, George Giancarlis raised, we already heard that above in another article, raised his to 404. Despite weaker than expected sales, he expects a generational set of growth opportunities. Investing.com, despite price cuts in the fourth quarter, Tesla managed to deliver only around 15,000 Cybercabs. Oh, these guys are worried a little bit. Cybertrucks, not Cybercabs. Only managed to deliver around 15,000 Cybertrucks. Around 15,000. You know why they're saying around 15,000? They have no idea. Now, Tesla thinks that that's the number, but we don't know. There's nothing. We have nothing to give us any idea of what's happening to Cybertrucks. Estimated about 35 to 40,000 units for the year. That's a far cry from Tesla's initial claim of 2 million orders. According to Bernstein analysts, this underperformance raises questions about whether the Cybertruck is a bust. The analysts believe that the Cybertruck is not gross margin positive, although Tesla has reported that it is. We struggle to see what the future of the product is, given flagging profitability and niche demand. We haven't got the Cybertruck down to the price that everybody's expecting, hoping for. The $7,500 deal that we just found about yesterday, where the Cybertruck now qualifies for that $7,500 tax advantage, should pop sales at the 80,000 level, which is where we still are today. But who knows how many we sold? We don't even know how many. And they certainly haven't reduced the price down to that 60,000 level. He says, quote, we highlight Cybertruck as a massive strategic miscalculation and an opportunity cost for Tesla, given that it took 4 years to develop and inevitably diverted attention from the lower cost car, according to Sonny Sacchioni. Bernstein also points out Tesla's declining auto gross margins amid aggressive price promotions. Of course, I don't think the margins are going down. The margins went up last quarter to 20%, 17% plus the value of the what do you call it? Those things, the energy monies that they get from the other companies. I think will be around the same in this quarter, as I've given in great detail elsewhere. Excluding there's some regulatory credits and one-time software FSD recognition. They think that it'll be about 15% compared to 17% last time. The analysts forecast Tesla's annual earnings to decline from 260 to 210. Don't think so. Even with an additional $1 billion in regulatory credits, there's a whole bunch of stuff that they're not taking into consideration, especially energy, which I explained in great detail yesterday on 3 different shows. We talked about that. Tesla's progress in the Robotaxi space is also under scrutiny. Despite the company's shifting investor focus toward autonomy, Bernstein's team is skeptical about Tesla's ability to outpace competitors. They cited the company's more limited sensor suite. My goodness, these guys need to grow up. Increased AI computing power will probably allow others to catch up relatively quickly, democratizing the technology. Tesla's Q4 deliveries rose 2% year over year to 495,600, but missed estimates, leading to slight decline in annual deliveries, about 1%. Dan Gallagher, Wall Street Journal, says this, but it bears reminding now that Tesla is a $1.2 trillion company worth more than the next 20 largest automakers combined, according to data from S&P. Taking a 6.1% hit on Thursday, back up this morning, however, even as the auto business that accounts for more than 80% of its annual revenue was experiencing the worst year on record. What? Worst year on record, meaning it went down 1%. Such as the draw of the artificial intelligence narrative, however, enhanced by the star power of Elon Musk. The Tesla chief executive frequently touts Tesla's prowess in AI as the company develops self-driving technology and something called Optimus. He says robotics. He also effectively used his platform, now called X, to tweet his way into the White House by enthusiastically supporting the election of Donald Trump. The majority of Tesla's share price gains in 2024 came after the November 5 election. That alone sets a high bar for the stock in the coming year. Tesla also now commands a notable premium, even compared with companies already making serious money on AI. Even with Thursday's slip, Tesla's shares traded about 117 times projected earnings for the next 4 quarters. Well, raise your earnings estimate then. That is far more than 3 times the multiple of NVIDIA. But NVIDIA's problem is that people are wondering if NVIDIA can keep it up in the out years, as opposed to Tesla, which has massive potential in the out years, more than any company in history. Anyway, hence, Wall Street is a bit dubious. A little over half the analysts covering Tesla's rate the stock as a sell or a hold, and has this wild premium. In a report last month, after Tesla's market cap peaked above 1.5 trillion, Chris McNally of Evercore said that about 1 trillion of this was the implied revenue from things to come. No, that's way too much of the implied revenue. Maybe half. Anyway, Joseph Spack of UBS reached a similar conclusion, arguing Tesla stock is mostly driven by animal spirits. Okay, at the very least, the coming year will need to show Tesla hitting ambitious milestones in self-driving technology in order to justify investors' hopes for a robotaxi business getting off the ground. That alone is no such sure thing. In a report Wednesday, Truist analyst William Stein reviewed the latest version of Tesla's full self-driving software, which he called more impressive than past versions, but he also noticed the imperfections remain obvious and prevent us from recommending its use. And yet, so many of us are using it full time, and I don't even have the most recent version. Anyway, Tesla Chan has this. He says Tesla's price target trends on Wall Street in recent days. Canaccord, we just talked about. Mizuho Securities raised price target to 515 from 230. I think that was much earlier. Daiwa from 420 to 420 from 285. Goldman's raised to 345 from 250. Morgan Stanley 400 from 310. Bank of America 400 from 350. That was quite a while ago. And Guggenheim from 156 to 175. All right. By the way, this is Randy Kirk. I know there's a lot this morning. There's a lot more to come. Hit the like, hit subscribe, hit notify, buy Cybertruck bottle openers because people are still buying them. I just shipped yesterday morning. I shipped 3 orders. And then also join Patreon. Let's get going here. AJ says, interesting article published by the World Bank. And he's right. This is an extremely interesting article. Global commodity prices set to fall through 2026 amid historic oil glut. Okay, I've been talking about this. Now, finally, the global commodity, article from global commodity prices are set to tumble to a 5-year low in 2025 amid an oil glut so large it is likely to limit the price effects of a wider conflict in the Middle East, according to the World Bank's. Well, now I'm not so sure that it's right. No, I'm sorry. Even so, overall commodity prices will remain 30% higher than they were 5 years before the pandemic. Why are they using that as the comparison? Next year, the global oil supply is expected to exceed demand by an average of 1.2 million barrels a day. Just about 750,000 barrels of that is coming from Argentina, as reported several times last week on this show. That's only been exceeded twice before, during the pandemic and then during the 1998 oil price collapse. The new oversupply partly reflects a major shift in China, where oil demand has essentially flatlined since 2023 amid a slowdown in industrial production and an increase in the sales of electric vehicles and trucks powered by liquefied natural gas. In addition, several countries are not part of the Organization of Petroleum Exporting Countries or its allies, OPEC, are expected to ramp up oil production next year. They don't even mention Argentina. You see, they are far behind. They need to catch up. They need to call me. I can give them the latest information. From 2024 through 2026, global commodity prices are projected to plummet by 10%. Global food prices are set to fall by 9% this year, an additional 4% in 2025 before leveling off. That would leave food prices nearly 25% above the average level from 2015 to 2019. So still, but not as bad as it was if this all happens. Falling food and energy prices should make it easier for central banks to reduce interest rates. Okay, this is from Marketplace. One of the federal economic releases of 2025 came out Thursday for a pretty important part of the economy, construction spending. This takes in everything from home building to putting up new manufacturing and power plants, hospitals, etc. And for November, the performance of this sector was kind of mediocre. Spending overall was flat from October, up 3% from last year. What gives? Partly the sector is highly sensitive to interest rates. And so, but home building, nearly half of all construction in the country is residential. Single-family home building was up well, with spending up about 8% year to date through November. Multifamily construction, though, was down. So we know this. The apartment building went crazy last year. They overbuilt. So now that is off, but single families is at least starting to show some signs of life. Demand for rental units is strong, but builders are deterred by high interest rates, says Gary Schlossberg, global strategist at Wells Fargo. We expect to see rental inflation picking up this year. So because they didn't build as many in the last 12 months, it was the previous year that they built so much apartments. Homeowners have a lot of discretionary income, and they're putting up some of that and fixing up their existing homes. In non-residential construction, the big story is a surge in manufacturing, up by double digits. 1 out of 5 non-residential dollars is going to giant manufacturing plants producing semiconductors, electric vehicles, and batteries. Well, there you go. A lot of that is driven by billions of dollars in the Inflation Reduction and the CHIPS Act. Remember, I'm a big fan of the CHIPS Act. That's the one thing Biden did right. But with the incoming Trump administration promising to sharply cut government spending, Paul Ashworth, chief North American economist at Capital Economics, said the risk would be that we get some of the IRA and CHIPS Act provisions undone. I don't think the CHIPS Act will be undone. And then we'll see a drop back in manufacturing construction spending. One specific type of commercial construction, meanwhile, is really hot. Data centers. Yeah, that's going to be very hot for a while. It's going to be years of building those data centers. That's partly the demand for more energy and processing capacity. Of course, that is also a big part of it. More and more people are saying we really don't want these giant, ugly white boxes going up across the street from where they live. What? Yeah, well, NIMBY is always going to be an issue, but I don't think it's going to slow down the construction of these data centers. AJ says the PE of the S&P 500 pulled back meaningfully in the last 2 months, a clear positive since it means valuations are less frothy. I do agree with AJ, as always. I always agree with AJ. So that's good to hear that the PE, so with the earnings coming in, that ended up reducing the overall PE. That is very good news. Okay, this is breaking. Economic activity in the manufacturing sector contracted in December for the 9th consecutive month and the 25th time in 26 months, according to supply executives in the manufacturing ISM. The manufacturing is a quote, the manufacturing PMI registered 49.3 in December. That is 0.9% point higher compared to 48.4 in November. So even though it's still in contraction, then it's getting better. The overall economy continued its expansion for the 56th month after 1 month of contraction in April 2020. Okay, the new orders index continued in expansion territory for the second month. That's good. The index returned to expansion after 6 months of contraction. The supplier deliveries index indicated marginally slower deliveries, but still at 50.1%. That's up 1.4 percentage points. Report of let's see. And then deliveries is the only ISM report on business index that is inversed. A reading above 50% indicates slower deliveries, which is typical of the economy improves and customer demand increases. The inventories index registered 48.4%, up 0.3%. You know how I feel about inventories. All right. I'm exhausted. Are you? What is all of that doing to the market this morning? Well, we'll take a look first at Tesla, which was up as much as 8 a few minutes ago, is now up $4.82, but is now back going in the right direction again. The Dow Jones up 167, the NASDAQ up 145, the S&P up 34. So, and all of those are also showing directionally up at this exact moment. We have got the Mag 7 mostly up, NVIDIA up 4, 75. Microsoft up 254, but Meta and Apple down a bit. Google and Amazon also up. And again, all of them trending a little bit the same way, beginning to show after a little bit of a sell-off, beginning to show some momentum towards the up and to the right. All of the all of the Cathie Woods are in the green right now, except for TDOC, which is only down 26 cents. So let's go back with the percentages here. We have got the Dow up 0.39, NASDAQ up 0.77, S&P up 0.59, and Tesla up 1.22. Still about the same as we said a moment ago. Okay, let's go look at those bonds. The 10-year is off 0.2 of a basis point. It had been off 2 full basis points earlier in the pre-market, but now it's almost back to even. So that's not good. The 2-year is actually up 0.4 of a basis point, and the 1 month up 4.4 basis points. Holy mackerel, the 1 month is now back above the 10. No, it's not. It's not back above it yet. Okay. But anyway, it was up yesterday and back up again today. What is going on with that short? I might try to remember to see if that's a problem or just some oddball situation. Okay, we've got oil up 52 cents. Oil, after I just read you that whole report on how oil should be flatlining and going straight down. I think oil basically it might be winter requirements because of this cold snap coming in. The headline is oil set for weekly gains as market eyes U.S. and Chinese policy support. Yeah, I don't like that headline at all. So anyway, we'll keep an eye on this. 73.66 for Texas Intermediate, so that's quite strong. 76.21.22, less than a $3 difference on the Brent. Natural gas down 5.9% at 3.444. So that has slipped way down. I wonder if the cold snap is not as strong as they expected, or whether other areas. I read that the other day too, that like, for instance, the West Coast is not seeing, and they're seeing very warm weather here. We haven't had a drop of rain yet in Southern California. And I don't think there's any projected yet either. So it's going to be, and it's very warm. It's like going to be 80 degrees today. Gold down a little bit, down 11, but still sitting at 2,657. Silver above $30 again at $30.16. Copper still above $4.05. It's been really flat for quite a while, up 0.68% this morning. Dollar on its track for its best week since early November. Bitcoin down 192 at 97,243. And there you go. That is the report for this morning. Today what we have is very fun stuff. We've got what is today anyway? Today is Friday. We have Larry Goldberg on at around 4-ish, usually on Friday. And then we've got, we have Beisel. I know his first name. Phil Beisel will be on at 7:45 over the weekend. Maybe a little more Phil Beisel. I'm expecting at least 2 shows from Phil when we record later today. And last night, of course, CERN Basher was on. Very excellent as always. You know about CERN. Here is the card if you want to go check that out, since you might have missed it. All right, I think I've covered everything. If I left anything out, let me know in the comments below. Yes, join Patreon. That would be lovely. Thank you for reminding me. And this is Randy Kirk. It's been great talking to you.